Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. So far I have completed 9 problems on manufacturing account. In this video I'm going to start the next problem, 10th and 11th problem. These two problems I'm going to complete in this video. So if you want the perfect knowledge, watch the video till the end. Don't skip in between. So already have uploaded so many videos. First 2 videos I have uploaded on the meaning of the term financial statements of a manufacturer. There I have explained in detail regarding how to make the financial statements. Then 2 videos on short questions I have explained, and those are very necessary for every student. Then I have uploaded so many problems, main problems on manufacturing account. So watch the videos till the end. Before starting the next problem, that is problem number 10, I expect my viewers to have a printout of the problems which are given in the link under my description. Always keep it ready. Take the screenshot of the solution of the 10th and 11th problem, then I'll explain all the points in detail. Now, see the 10th problem. Saul runs a manufacturing business. A. 3 different questions are there. The first one, explain why is it necessary for Saul to prepare a manufacturing account in addition to income statement. Every business will make the income statement, but manufacturer will open one more account called manufacturing account. So what is the purpose of making this manufacturing account? Every manufacturer wants to find out what is the cost of production. The purpose of making manufacturing account is to calculate the cost of production. How to calculate cost of production? We calculate the direct cost and indirect cost incurred in making the product. The cost which are incurred in the factory. So we have to find out what is the cost of production. So how to calculate? Find out the material, cost of material consumed, cost of direct wages incurred in making the product, and direct expenses. When we include direct material, direct wages and direct expenses, we'll get the prime cost. To prime cost we add indirect factory overhead or indirect manufacturing overhead. So that manufacturing overhead incurred consists of all indirect expenses in manufacturing the goods. So you add up manufacturing overhead, we'll get the production cost. That is the purpose of making the manufacturing account. Here I have explained it is necessary for Saul to produce a manufacturing account in order to calculate the cost of production for his business. The main purpose of making the manufacturing account is to find out cost of production. This will then be used to calculate the sales and gross profit. After making the manufacturing account, we proceed to prepare the income statement. This cost of production will be transferred to income statement to find out the gross profit. That is the first question. Second question is, explain the difference between direct labor and indirect labor. 2 types of labor charges are there. Labor means the wages which are paid to produce the goods, that are called labor. So broadly we divide the labor into direct labor and indirect labor. Direct labor means the wages paid to those workers who are engaged in manufacturing the goods, directly involved in producing the goods. That is called direct labor. And indirect labor means wages paid to those workers who are not directly involved in production but indirectly involved in production, like the salary of supervisors, the salary of wages, the salary of managers, and the rent of the premises. These are the examples of indirect labor. So here I have explained direct labor is the cost of wages of the people who are involved with the manufacture of product, who are directly involved in converting the raw material into finished goods. That is called direct labor. Whereas indirect labor is the cost of wages of the people who are not involved directly in production process. such as the salary of supervisor, salary of manager, and the rent of the premises. So first A bit completed, B bit completed. Now I am coming to the C question. The following information is provided for the year ended 31st December 2012. So here we are given stock of raw material on 1st January 2012 and stock of raw material on 31/12/2012. Opening inventory of raw material, closing inventory of raw material. Then WIP, opening, closing. Stock of finished goods, opening, closing. Purchase of raw material, carriage on raw material, direct factory wages, indirect factory wages, royalties. Remember, royalty is a direct expense. It's a part of prime cost. Select the relevant figures and prepare the manufacturing account for the year ended 31st December 2012. Only manufacturing account, no need of income statement. So this stock of finished goods, opening, closing, not required. Stock of finished goods will be taken in the income statement, not in the manufacturing account. So in manufacturing account, we consider the inventory of raw material and inventory of work in progress. That's it. So how to make the manufacturing account? See carefully here. Manufacturing account for the year ended 31st December 2012. First we need raw material consumed. So opening inventory of raw material 24,000 given. Add purchase of raw material 2,34,000. Add carriage on purchases or carriage inward. Add up these three, 2,64,000. From this, deduct the closing inventory of raw material, that is 34,000. After subtracting 34,000, the net amount is 2,30,000, that is the raw material consumed. To this, we add direct labor. So, direct factory labor 1,10,000. And direct expenses. In the previous problems, we were not given direct expenses. But in this problem, direct expenses are given in the form of royalties. The royalties, direct expense 60,000. The total comes to prime cost 4 lakh. Now we include manufacturing overhead or factory indirect expenses. The first one, factory indirect expenses are 1,85,000. To this we add opening inventory of WIP, work in progress 9,760. Add up 194,760 minus closing inventory of work in progress 10,380. Subtract, will get 1,84,380. We got the prime cost and we got the manufacturing overhead. Add up both. So 4 lakh plus 184,380, 584,380 is the production cost. That's it. So this is the end of problem number 10. Now, problem number 11. Tom by a manufacturer of children's toys provided the following information for the year ended. Manufacturer. The businessman is the manufacturer. So we are given stock on 1st November 2016 opening. The year begins from 1st November 2016 and ends on 31st October 2017. The opening inventory of finished goods, opening inventory of raw material, opening inventory of WIP. Similarly, stock on 31st December 2017, closing inventory of finished goods, raw material and WIP. Then factory machinery. Machinery is there in the factory. The cost 3,50,000, accumulated depreciation 20,000. This information is given to calculate depreciation on factory machinery. Then office equipment. This is also one of the non-current asset. So factory machinery is a non-current asset and office equipment is a non-current asset. Cost and accumulated depreciation. Again, it is given to calculate depreciation. Then direct factory wages. These are the direct wages, part of prime cost. Heat and light, indirect factory wages, insurance, purchase of finished goods, purchase of raw material, rent and rates, revenue. These are the items given. Now, additional information. On 31st October 2017, insurance paid in advance, prepaid insurance 250. So this prepaid insurance 250 will be deducted in working note. After completing the solution, write the working note. I always told you, whenever you are watching the video, keep a notebook, pen, calculator beside you. When I say some points, immediately write it down. Now you write down insurance. See here, insurance paid is 1750. So 1750 insurance paid minus prepaid insurance is 250. So 1750 minus 250, 1500 is the insurance for the current year. Current year insurance is 1500. Now, and direct factory wages owing are 1400. Direct factory wages owing, accrued, payable is 1400. So this 1400 will be added to direct factory wages. Here it is given direct factory wages 78,600. So 78,600 plus 1400, 80,000 is the total direct wages for the year. Write it down in the notebook. When we take direct factory wages, we'll take 80,000. See here, we have taken direct factory wages 80,000. How we got 78,600 plus 1400. First adjustment completed. Heat and light, insurance, rent and rates are to be apportioned 3/4 to the factory and 1/4 to the administration building. So wherever heat, light and insurance is there, we apportion 3/4 to the factory and 1/4 to the office. Office means it go to income statement. Factory means it goes to the manufacturing account. Example, heat and light. Heat and light is given 26,000. So 26,000 into 3/4. You calculate, you will get here 19,500. It will go to manufacturing overhead. Whereas remaining heat and light 26,000 into 1/4, that will go to income statement here. Heat and light 6,500. So we have bifurcated. Similarly, insurance. Insurance is 1500. 1500 3/4 will be taken here, 1125. 1500 into 1/4 will go to income statement, 375. Next one, rent and rates. Rent and rates are given in the problem. Rent and rates, where is the rent and rate? Yes, rent and rates are 8,000. 3/4 of 8,000 will be taken 6,000 here. And 8,000 into 1/4, 2,000 will be taken here. So we have bifurcated these three items. 3/4 we have taken in manufacturing, 1/4 we have taken in income statement. Next comes factory machinery is depreciated at the rate of 25% on reducing balance method, RBM. So in the notebook you write down depreciation on factory machinery 25% on RBM. So in RBM we calculate the net value, carrying value. How to calculate carrying value? Cost minus accumulated depreciation. So in the problem it is given factory machinery cost 3,50,000, accumulated depreciation 2 lakh. So 3,50,000 minus 2 lakh, you will get 1,50,000. So 1,50,000 into 25%. 1,50,000 into 25%, you will get 37,500. So we got depreciation on factory machinery 37,500. How you got? 25% of 2 lakh. 25% of 1,50,000, sorry. 25% of 1,50,000. Next, office equipment is depreciated at the rate of 20% on straight line basis. Straight line basis means on cost. What is the cost of office equipment? 75,000 is the cost. So 75,000 into 20%. 75,000 into 20%, 15,000. So depreciation on office equipment, 15,000. That's all. 4 items we have taken. Next page, it is given A point. Prepare the manufacturing account for the year ended. Prepare the income statement for the year ended. And last C point, prepare an extract of the statement of financial position to show the non-current assets on 31st October. 3 questions are there. preparing manufacturing account, prepare income statement and show the extract of statement of financial position, how the non-current assets will appear. That's it. One by one we'll complete. First we complete the manufacturing account. Tom B, manufacturing account for the year. Raw material consumed. Opening inventory of raw material 45,000 given. Purchase of raw material 2,45,000 given. Add up both, we get 2,90,000 minus closing inventory of raw material, closing stock 50,600. Deduct raw material consumed 2,39,400. To this we add direct factory wages. So direct factory wages are 80,000. Just now I told you some amount is owing, outstanding. We have added 1,400. We have added. So 78,600 plus 1,400 we get 80,000. Add up 3,19,400 is the prime cost. We got the prime cost. Now manufacturing overhead. Manufacturing overhead, heat and light, insurance, rent and rates. Already I told you in the problem it is given 3/4. Heat and light, insurance and rent and rates. 3/4. I have taken 3/4 in the manufacturing account. So heat and light, insurance, rent and rates. Indirect factory wages completely I have taken. No apportionment. Factory, indirect factory wages completely. Depreciation on machinery, I told you on reducing balance method. We have calculated 37,500. Take the total 93,055. Add opening inventory of WIP minus closing inventory of WIP 90,600. That is the manufacturing overhead. Now prime cost plus manufacturing overhead, you will get 4,10,000 is the production cost. So we have completed manufacturing account. The second question it is asking you to make the income statement. So income statement for the year ended 31st October. Revenue 5,63,000 given in the problem. Then less cost of sales. Opening inventory of finished goods 68,000. To this we add production cost. We got 4,10,000. So add up production cost 4,10,000 plus purchase of finished goods. So purchase of finished goods 22,000. Add up we'll get 5 lakh minus closing inventory of finished goods, that is 62,000. We got cost of sales 4,38,000. Deduct cost of sales, we'll get the gross profit 1,25,000. From gross profit deduct all indirect expenses, heat and light, insurance, rent and rates. These are 1/4 amount. 3/4 already we have taken in manufacturing account. 1/4 we have to take in the income statement. Then depreciation on office equipment, 20% on straight line basis. Straight line means on cost. So 20% on cost of office equipment, 15,000. Take the total 23,875 is the total indirect expenses. Now subtract. Gross profit minus indirect expenses will get the profit for the year 1,01,125. Finished. So we have completed the manufacturing account, we have completed income statement. Lastly, it is asking you to show the extract part of the statement of financial position and show the non-current assets. So we have two non-current assets, factory machinery and office equipment. So 3 columns, cost column, depreciation, carrying value. Carrying value means cost minus accumulated depreciation. Cost minus accumulated depreciation. So here non-current assets are factory machinery. The cost of the factory machinery is given in the problem as 3,50,000. So I have taken 3,50,000. Accumulated depreciation. Accumulated means total, up to date. What is the depreciation, accumulated depreciation given in the problem? 2 lakh. 2 lakh was the accumulated depreciation at the beginning of the year. Now end of the year, how much depreciation we have provided on machinery? 37,500. So 2 lakh was the old accumulated depreciation plus current year depreciation 37,500. So 2,37,500 is the accumulated depreciation. 2,37,500. So 3,50,000 minus 2,37,500, 1,12,500 is the carrying value of factory machinery. Similarly, we calculate for office equipment. What is the cost of the office equipment here? It is, where is that cost of office equipment? Yes, sorry, I'm seeing the other problem. Here, cost of office equipment is 75,000. 75,000 is the cost of the office equipment. How much was the accumulated depreciation in the beginning of the year? It is given 25,000. 25,000 was the accumulated depreciation at the beginning of the year. And during the year, how much depreciation provided? 15,000. So 25,000 plus 15,000, 40,000. So 40,000 is the accumulated depreciation. 75,000 minus 40,000, 35,000 is the carrying value of office equipment. Now simply take the total. 3,50,000 plus 75,000, 4,25,000 is the total cost of non-current assets. Accumulated depreciation 237,500 plus 40,000, 277,500. 112,500 plus 35,000, 147,500. That's it. This is the extract of statement of financial position showing the non-current assets. That's all. So in this video, I have completed two problems, 10th problem and 11th problem. So if you're watching all the problems, definitely at this moment of time, you got a good command on the topic of financial statement of a manufacturer. Inshallah, we'll continue the next problem in the next video.